This video is an Uncovered Japan Company research report on ARE Holdings, ticker 5857. ARE is Japan's largest independent precious metals recycler. It recovers gold, platinum, palladium, and silver from jewelry, dental materials, electronics, and spent catalysts, then refines and sells those metals through an integrated urban mining network. The report scores are 15 out of 20, 5 for growth, 4 for value, 5 for macro fit, and 1 for supply and demand. At the report date, it traded at 8.57 times forward earnings and 1.08 times book, with a 4.42% dividend yield. The weak score is technical. Margin buying was extremely elevated, creating a potential near-term share overhang. The customer proposition is straightforward. Jewelers, dental labs, electronics makers, and catalyst processors send metal-bearing waste to ARE. The company samples and assays it, separates the valuable material, refines it to high purity, and either returns metal or settles in cash. Scale, collection density, and trusted measurement matter because customers need confidence that small concentrations of very valuable metal are measured correctly. Revenue rose from 192 billion yen in fiscal 2022 to 570 billion in fiscal 2026, while operating profit recovered to a record 37.1 billion. This is not clean volume growth. Higher precious metal prices passed through reported revenue, and North American refining expanded rapidly. Investors should focus on segment profit and normalized margins rather than top-line growth alone. The moat combines network density with hard-to-replicate qualifications. ARE operates collection, assay, refining, vaulting, and trading inside one model. London Bullion Market Association and Responsible Jewelry Council credentials act as customer gates, while environmental credentials matter increasingly in procurement. An A- credit rating also supports the large, low-cost working capital needs of holding liquid precious metal inventory. The headline equity ratio fell and rebounded as metal inventory expanded, but management calculates roughly 79% equity after excluding liquid metal assets. Those inventories are valuable, readily financed, and substantially hedged. Return on equity was 13.7% in fiscal 2026. The practical lesson is to separate operating leverage from the financing mechanics of metal inventories. Fiscal 2026 operating cash flow was negative 99.4 billion yen, a number that can alarm a screener. Most of it reflected a roughly 71 billion yen inventory build as metal prices and trading volumes rose, not an operating loss. ARE funded the expansion with borrowings, bonds, and converted equity. Normalized multi-year cash generation is the more useful test. Vision 2030 targets 750 billion yen of revenue, 50 billion of operating profit, 420 yen of earnings per share, and roughly 13% return on equity. Management raised the revenue goal by 210 billion within about 2 years because the business outran the original plan. The key execution tests are electronics recovery, bando capacity, new metals, and disciplined use of 80 billion yen, earmarked for new business and acquisitions. ARE targets a payout ratio of about 40% and plans roughly 60 billion yen of shareholder returns over 5 years. The forward yield was 4.42%, well above the market and recycling peers. But the dividend is not guaranteed to rise every year. Fiscal 2025 included a cut when profit fell, followed by a 56% increase in fiscal 2026. At 8.57 times forward earnings, ARE traded below its own 10-year average near 9.5 times, and around 35% below recycling peer Matsuda Sangyo in the report. The discount reflects genuine forecasting noise, metal prices, inventory accounting, North American trading gains, and lumpy working capital all make a single year's earnings difficult to read. The report's author estimated 3-year scenarios range from 2,100 yen in the bear case to 5,880 in the bull case, with a base case of 3,800. These are illustrative scenarios, not price targets. They show sensitivity to metal prices, North American profit normalization, Vision 2030 execution, acquisition discipline, and the valuation multiple. In summary, ARE is a scaled urban mining leader with valuable accreditations, a high-margin North American platform, structural demand from electronics and circular economy policy, and a clearly governed dividend. It is also difficult to model, exposed to metal price and trading cycles, and burdened by a technical share overhang. The indicators to watch are segment profit, electronics recovery volumes, inventory funding, acquisition returns, dividend delivery, and margin buying balances. This is background research, not investment advice. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.